Hello and welcome to Bull Profits Market Talk Monday for the week of August 3rd, 2020. I'm Amber Lancaster and you are watching the Paul Mampilly YouTube channel, the channel for the Main Street stock investors. So this week, we're going back in time actually to show you how the America 2.0 technology boom that we're witnessing today is not the dot-com tech boom or bubble of 1999. And also, as you can see, great news, Paul Mampilly is joining us today to give his latest market insights and shed some light on today's topic. But before I begin, please make sure to subscribe to, comment on, and share this YouTube channel with your friends and your family. When you subscribe, you'll be instantly alerted when new video content is uploaded. Plus, it supports the channel. So to follow Paul and me on Twitter, you can find us at Mampilly Guru and at A Lancaster Guru. So let's get started. 1999, the year when popular TV shows like Who Wants to Be a Millionaire, SpongeBob SquarePants, and Family Guy made their television debut, was also an exciting trading year in the technology stock sector. And I know because at that time, I was a recent college grad, as you can see in this throwback photo of me with my mom and my grandma. But I was also a young analyst just starting my career at Bloomberg and was completely caught up in the dot-com boom, buying various dot-com stocks and watching my portfolio go up and up with zeal. And at the time, my portfolio consisted of stocks like eToys.com, Pets.com, TheGlobe.com, as well as eBay.com, Amazon.com, and Priceline.com. And because it was 1999, about 8 years shy of my first Apple iPhone smartphone, I had to call my broker on my Nokia cell phone, which by the way, I still have to this day, with an antenna, to get performance numbers on my stock holdings on a daily basis. Now, looking back, unlike today, 1999 had all the markings of a bubble. And as Paul stated in our latest internal investment call, 1999 had a completely different feel than now. And Paul, at the time, right, Paul, you told us you're at Deutsche Bank, and it was not like today. He quoted that in 1999, we did not have a pandemic where people were locked down and half the people were locked down in fear. We didn't have $3 trillion sitting on the side in cash. We did not have a crash that took 1/3 of the market's values of companies. It was also the beginning of fake innovation. So what's fake innovation? Well, everyone had this idea that dot-coms were one way, but no one knew how. People had ideas how they were created, but most of the companies did nothing, end quote. So he also went on to add this personal story I'm going to share, Paul, that he said by his recollection about how crazy 1999 was that he was at Shea Stadium at a Mets game. And this is how maniacal people were about the stock market then. They put up in between innings on the big scoreboard that the Dow was up however much. And guess what? The whole stadium cheered, end quote. Good times. Well, Bull Profits Nation, just know, based on our internal analysis, bubbles are apparent through behavior. Tech stocks today is a moment which is different in the sense that there is an enormous transition going on between two worlds. Some say, and some may construe it as being in opposition, America 1.0 and America 2.0 head-to-head in a battle royale. But it's not. Per Paul, it's more like a crossing of the tides. And Paul, he will actually explain what he means by crossing of the tides in just a moment. But let me leave you with this. We here at Bull Profits are believers in the new way, and other folks are not. And as Paul aptly put it, quote, the people who are negative on Tesla, negative on Slack, tell us Uber is worth nothing. A Wayfair should not have its market cap. Think that EVs are a fad. Tell us self-driving will take 50 years, essentially in every aspect. They are applying lessons from the previous generation, where the innovation that carried through in the 80s and the 90s was seeded in the 1960s, end quote. So there's one more macroeconomic element that we can add to actually support the non-bubble take. Check out this Bloomberg chart that shows how the NASDAQ 100 of today is different from the dot-com era. So this chart shows a, quote, very different macro backdrop versus 1999, which per Canaccord Genuity suggests any pullbacks that we see in the NASDAQ 100, a tech-heavy index, should prove temporary. As Bloomberg put it, quote, back then, the Federal Reserve was tightening its monetary policy, whereas now it has cut its rates near zero, providing support to recent tech rally action, along with a wider market participation, end quote. So as you can see, innovation-wise and macroeconomic-wise, the America 2.0 world is here for the long haul. So Paul, please share with us your take on this 1999 bubble versus today.
I have to say, you were a pretty risk-taking trader to be owning the globe.com, pets.com. So I actually have an additional story on top of the one of being at Shea Stadium, which I can tell you was pretty memorable and definitely sticks in my mind. It's a little bit like the Shoeshine Boy story for me, as being like, okay, there's something wrong here.
Yeah.
But I had a stock called Track Data at the time. And so at the time, Motley Fool used to publish this, I think it was a weekly thing where they would call it the Daily Double. And I have no idea if Motley Fool at the time knew that it was capable of sort of bringing traders in. But Track Data announced that they were going to introduce internet trading, which was a great innovation at that moment. In time, it was, most companies did not have it. And sure enough, I own Track Data, and I kind of hit the jackpot. They published on Track Data. The stock went from, if I remember, like from $4 or $5 to $25, like that.
Awesome.
And I sold it at something I don't know, I felt so great. I'd made so much money for me at the time. And then the stock went even higher. And then, I wished I'd waited 10 or 15 more minutes, but however, I still made a lot of money. And the point of that story is to really contrast that. Sure, there are individual stories here and there of people, betting on Hertz or Kodak or stuff like that. Nonetheless, as you mentioned, we also have, what is the unemployment rate at this moment? It's 20%. It's some extraordinary number. Look at the amount of money that has come out of the stock market in March. I read an article, I believe it was on Bloomberg, that said as many as maybe 1/3 of all folks, I can't remember the number, over 60 or 65, completely sold out of the market. Completely sold out of the market. So a completely different environment relative to 1999 to today. So when I see these articles, Amber, on MarketWatch or Yahoo Finance, I disbelieve it.
Right.
And I would tell you that go look at companies like Facebook, go look at companies like Amazon. On the Ian Cast, we were talking about the extraordinary levels of innovation that are still being pursued by these companies. And that comes to, well, what we talked about on our call, which is that this is a moment of two tides crossing over. Many people believe that there's inevitable that these things are going to smash, and as a result, we are going to have some catastrophic outcome. And we disagree with that view. We believe that this is a shifting of the tides, where one tide is sort of drifting out into terminal decline. And there is another tide driven by the great megatrends of our time: Internet of Things, artificial intelligence, blockchain, robotics, new energy, precision medicine, space, and the emergence of new industries like space that simply did not exist as an industry. It existed as an activity. Or, I've got my Bitcoin hoodie on, or crypto becoming a genuine innovation that is going to radically and completely disrupt and really terminally end the existing worlds of banking and finance and insurance. So these two worlds are sort of, are crossing over each other. And it is, for some people, very disconcerting to see this much change happen so fast.
Yeah.
So I was telling on our investment call that I was at a robotics conference in 2015. It was called Robo Business.
Mhm.
And there was a panel talking about self-driving cars, and no one really was talking about it as something that was likely to happen, I'd say even best case scenario, 10 years.
Mhm.
And today we have hundreds of thousands of cars that have level 2, level 3 capability. You can argue exactly where it is. Nonetheless, every Tesla has the capability to self-drive. In my judgment, because I have a Tesla
Mhm.
with self-driving capability, I would say on highways, that capability is somewhere between, I would say, 75 and as much as 90% given the conditions on the road.
Wow.
So this is how much change is happening and at what rate. And obviously, if you are someone that disbelieves this change and sees it as a fad, as a problem, as a bubble, as something that is unsupportable, something that cannot continue, and that the old world will really sort of come back, then you're definitely in a position where you see things as a bubble and as a problem. But however, from our perspective, and the results bear out that we believe our direction is right, the America 2.0 direction is right, in the sense that in Profits Unlimited, which is our base service, our flagship service, um, Patrick Goodrich, who's our incredible colleague that tracks our performance,
Mhm.
says for 2020, Amber,
Yeah.
as of the end of last week, Profits Unlimited equal weighted by means that if you put an equal amount of money into each stock on the day that we put our buys out for the model portfolio,
Mhm.
and if you sold them according to on the same basis when we issue ourselves, we're up 26% versus
Wow.
what for the S&P 500?
About
Nothing. I
yeah.
mean, nothing. So the difference, Amber, is that S&P 500, while it does have Google, it does have Facebook, it does have, yes, I know it does have Apple. I've got my troll on Twitter who keeps telling me every time Apple goes up, that keeps pushing it up. However, there's insufficient amounts of it in the S&P 500 for now
Mhm.
to really keep up with the America 2.0 companies, which are rocketing upward. And so, if you're interested in these kinds of companies that are laser focused, click on the strong hands above, and this is going to take you to my America 2.0 presentation, where I really lay out the entire scenario which is unfolding right now. And people were skeptical. However, I can tell you that our 100,000 plus readers of Profits Unlimited are no longer skeptical, because they are seeing the benefit and the gains of big winners, big America 2.0 winners, which are the companies that are completely recreating the world. And just to end, Amber,
Mhm.
I'm still bullish, optimistic, positive. BOP,
Yeah.
which is our hashtag for Bull Profits, on where we stand. And we know that there are many skeptics out there where we would tell you to join in our Bull Profits Strong Hands Nation. And there's always going to be ups and downs. Some years maybe a little bit more violent than others, like this
Mhm.
year. Nonetheless, because the underlying conditions are so strong and so good, markets come back, Amber. And so I'm going to put that back to you, and then I'm going to log off and let you finish off the rest of Market Talk, Amber.
Oh, wonderful insights as always, Paul. Thank you for joining us this week.
Thank you.
Okay.
Bye.
Bye-bye. Finally, turning toward the economic week ahead for the U.S. calendar, there will be 9 major economic releases. On Tuesday, June factory orders and June final durable goods orders will post at 10 a.m. On Wednesday, weekly mortgage apps, July ADP employment change, and June's trade balance will post at 7 a.m., 8:15 a.m., and 8:30 a.m. respectively. On Thursday, weekly jobless claims will post at 8:30 a.m. And on Friday, the July jobs report will post at 8:30 a.m., followed by June's final wholesale inventories month over month posting at 10 a.m. Now, of these releases, we'll be keeping a close eye on the July jobs numbers. So that concludes this week's Market Talk. Thank you so much, everyone, for tuning in. We appreciate you so much. Take care, and until next time, we'll talk later.